Hi, good evening and welcome to this evening's personal tax revision session. Tonight we're going to be looking at task 7 of the assessment, which is about capital gains tax principles. So in the first part of the task we're given 4 different statements. We need to say whether they are true or false. So number 1, Abigail sold a painting for £5,400 which originally cost £4,900. This will be a chargeable gain of £500. So this one would be false, and that's because the sale proceeds were below £6,000 and the original cost was also below £6,000. So it would in fact have been exempt. The next one, disposals to Abigail's grandmother would be at market value. This one is true because the grandmother would be seen to be a connected person. Abigail made a loss on a disposal to a sister. She must offset this loss against the current year gain made on a disposal to her father. So this one is false, and that is because she cannot use that loss against it again to her father. The loss can only be used on any future gains that are made to a sister. And then the last one, the maximum amount of deemed occupation for principal private residence relief available when self-employed overseas is 4 years, and this one is true. Okay, part B. Julian sold half of his field for £80,000. The remaining area of the field was deemed to be worth £60,000. It originally cost £28,000. So what is his capital gain? And we're told that this is the gain before the annual exempt amount. And we've got a few options to choose from. This is the part disposal calculation. So you need to remember the formula. If you remember, it is A over A plus B. So A is so Julian sold half of his field for £80,000. So these are the proceeds. So A, £80,000 divided by, so again, B over £80,000 plus, so this will be B, which is what the remaining area of the field was seen to be worth, which is the £60,000. So that means we'd do £80,000 divided by £140,000, and then we would times that by the original cost, and we're told that the original cost was £28,000. £8,000, and that should give us £16,000. So the proceeds were £80,000 less the £16,000, so that is our allowable cost. And that leaves us with £64,000. So the capital gain, £64,000. So part C, Sarah sold a holiday home in which she had never lived for £500,000. She paid the estate agent's commission of 2%. She originally bought it for £140,000. Since then, she spent £25,000 on an extension, £20,000 on replacing a kitchen, and £5,000 on repairing the roof. Complete the table below to calculate Sarah's capital gain, again before the annual exempt amount. Firstly, gross proceeds. So we're given the gross proceeds in the question as being £500,000. Selling costs. So we're told that she paid the estate agent's commission of 2%. So this will be 500,000 times 2%, which will give us £10,000. So we deduct those selling costs, which leave us with net proceeds of £490,000. Then we've got the original cost. So the original cost was £140,000. So enhancement expenditure. So we're told in the task that she spent £25,000 on an extension. Then £20,000 on replacing the kitchen, £5,000 on repairing the roof. Now, the £20,000 on replacing a kitchen and then the £5,000 on repairing the roof, these two aren't allowable. And that's because they're seen as being a maintenance cost. They're a maintenance cost. So we would just put the £25,000 for the extension under there for the enhancement. Net proceeds, we will deduct from that original cost of £140,000. We will also deduct the enhancement of £25,000, and that leaves us with a capital gain of £325,000. So thank you very much for attending this evening's personal tax revision session. I hope to see you all again soon.